Good day everyone, this is Patrick from EasyFX Code Trading System, and it is Saturday the 25th of July 2020, and this is the weekly analysis for spot gold and dollar yen for the 5th week of July. And both are behaving in a correlation or inverse correlation as expected, with spot gold rallying up higher and finally dollar yen breaking lower, breaking below the support, and all due to a weaker US dollar. This is the DXY index, US dollar index for the last week for our time frame, and you can see that it has weakened significantly after breaking lower over the last couple of weeks, and finally fell below the symmetrical triangle and this support. So both all the major pairs against the US dollar has benefited, and spot gold has continued to rally from Tuesday and broke through the resistance initially that we identified, and from this bullish reversal setup is broken through 162 fib extension and then the 200, and attempting to target the all-time high at 1920.70 is only about 190 pips away from breaking that. And if we take a look at the weekly and monthly, we can see this all-time high here set in 2011. So it's easily broken through the 1800 level. So now this is going to be the clear target that is going to aim for, and with this reversal move, that's also aligns with the 262 fib extension, and the 200 fib extension was at 1859.90, so let's call it 1860. That could be an intermediate support, and then well below that there's the 162 support level, so it may not retrace that far back yet until it attempts to break the 1920, and there could be a reaction once it hits that, and could be a pullback or consolidation, and it could attempt to try to break through that level again. But meanwhile, if US dollar continues to suffer next week, then gold is going to continue to rally. There is one significant news coming up this week, and late Wednesday night or Wednesday afternoon in the US, with the FOMC rate and policy decisions coming up. So that's the only major news coming through. There are some other news as well for the US, with durable goods orders, consumer confidence, advanced GDP, but this is what everyone will be watching out for. Okay, so with support at the 1860 to the close now at the 1901, just crossed the 1900. It's about a 420 440 range, right to the high. It did hit a high of 1906.54. So there's quite a lot of room for support for next week. So depends where it's going to start to bounce from. We could go down to a 4-hour time frame to see what the potential area is going to be on the retracement. Let's see if this see if we can find a possible support level for this recent move up. And yeah, it's could coincide with this 1860 level that we highlighted, because the 32 fib retracement brings us to 1864. So this zone will be a good zone to watch out for, 1860 to 64 for possible bounce. All right, and if it does find support here and attempts to retest or test the all-time high, and if it does break through, then it could rally towards the 1950 area, because that's where the 138 fib extension is, 1949.18. Right, so we'll watch the price action for early part of next week. And as the inverse correlation, the US dollar against Japanese yen, that has taken tumble. Finally, after a long consolidation, it fell through the support trend line of the lower triangle and fell hard on a Friday, spiked through the 106 to hit a low of 105.68, but managed to climb back up to just close above 106. So that's going to be a key intermediate support at a 106, and once that gives way, it's going to open up to target 105. If we take the bearish continuation move, it could target the 138 extension at 104.63. And below that, there's also a low from last year that you could attempt to retest as well at the 104.45. Right, which is so there's a zone here between 45 and 63 as support if the 105 is breached. Okay, so there are a few US news, but the major one is still the FOMC policy decisions. There are other news like durable goods orders, but the key one will still be the FOMC decisions. All right, so do check out my other videos on the other major pairs, and have a good and safe week next week, and a good trading week as well. And cheers for now.